plus 320% in revenue over the past 3 years during the same period, plus 850% in earnings. These are the numbers of the company we will discuss today, numbers that are entirely comparable and similar to those of Nvidia during the same period. And the price of this stock, in fact, has risen by 1,300% over the past 3 years, while Nvidia's has risen by only 527%. However, since the beginning of 2024, the situation has changed and the price of SMCI has risen much less than Nvidia's. In fact, in recent months, its value has plummeted significantly. Why? Well, we will understand that today by talking about SMCI ticker, which stands for Super Micro Computer. Although for many, the acronym means very expensive boxes, the strength of this company lies primarily in being in the right place at the right time. Yes, because SMCI doesn't do much else besides assembling and delivering servers, but specifically, it does so for high-performance computing servers like those using Nvidia's H100. After assembling them, it also installs them. Overall, it provides a low-margin service, but it does so in a particularly hot sector that, despite various incompetence not understanding, will undoubtedly see further significant growth. Obviously, artificial intelligence is very important for this company. The strong partnership between SMCI and Nvidia is also underscored by the fact that SMCI's CEO, Liang, is very good friends with Huang. Do you see any similarities? Well, these two have known each other for decades and indeed have a very close friendship that goes beyond their professional relationship. So, it's a company that practically packages Nvidia processors and then resells them. It doesn't seem like there's a huge competitive advantage. To perform this operation, many other players could do it. Yes, but also no, in the sense that AI has made servers completely different from what they used to be. In fact, an accelerated computing server for AI with video cards like the H100 is a huge energy consumer and therefore needs very sophisticated power units and also needs to dissipate a lot of heat, so even the case can be crucial for saving data centers and the companies that operate these data centers like Microsoft, Amazon, Google, or even Oracle. For these companies, it can be very useful to have cases that can dissipate heat very efficiently. So even a case is reaching interesting levels of sophistication and directly impacts the costs of data centers. Supermicro has recently announced liquid cooling solutions for its servers. This technology seems to make AI more sustainable and less energy consuming. Liquid cooling is a method to keep servers at the right temperature using special liquids instead of simple air. The use of these special liquids is more efficient than using air. This way, the same cards, like the Blackwell, can operate at higher clocks and thus have unprecedented performance. Additionally, SMCI has also developed a modular architecture that allows for a certain number of resources, such as compressors, ducts, and so on, to be shared by multiple servers. Moreover, the design created by SMCI allows access to processors directly from the front and also access to the liquid inlet and outlet conduits, making maintenance much simpler. Furthermore, it has developed a special method that allows for the replacement of the cooling liquid even while in use, which should improve and essentially avoid downtime, meaning not having to shut down servers to replace the liquid. Obviously, as complex as it is something that others will certainly catch up on, but for now, SMCI is ahead of its competitors and thus in this race to secure as many contracts, it seems to have a step ahead. However, there are also some downsides. In particular, the company Hindenburg Research, which specializes in short selling, has targeted SMCI. Now it's in trouble. The accusations involve accounting manipulation, lack of transparency in financial statements, problems with customers, export controls, and so on. Hindenburg claimed that its allegations are based on a 3-month investigation. The investigation is primarily based on interviews with former high-profile SMCI employees, interviews with industry experts, a review of litigation records, and an analysis of various customs records, and they claim to have found clear accounting red flags. Based on its investigation, Hindenburg declared that it has taken a short position on the company, and indeed, the price of this company has plummeted by over 47%. Now you understand what Hindenburg does? It engages in short selling, so it conducts investigations to find reasons to short, makes them public so that everyone rushes to sell the stock, and then benefits from the position it has taken. The plan seems to have worked great, so much so that the U.S. Department of Justice had to essentially open an investigation. This doesn't necessarily mean that SMCI is guilty, but even for formal reasons, it had to do so because these alleged irregularities were made public. Those who believe in SMCI's good faith have noted that, for example, the interviews were conducted with people who do not have access to SMCI's financial records. For example, the former head of operations, a person who organizes SMCI's activities but does not have direct access to the accounting books, as a CFO would. Despite everything, SMCI's price seems very advantageous to me. I want to be clear, there are many risks, so this is absolutely not financial advice. The current valuation of the stock and the company is $28 billion, and it is trading at around $47, while its peak a few months ago was $118. The price-to-earnings ratio is about 22, which, although not low for a company with a margin below 10%, is still very interesting given the growth rates. If we wanted to make a comparison, even if not entirely relevant, SMCI is growing at a rate similar to Palantir. Yet Palantir has a valuation 10 times higher if we look at earnings. I have decided to invest heavily in SMCI for the reasons. From a purely technical point of view, the new liquid-cooled servers shift part of the value of high-performance computing more towards the assembler, so towards SMCI itself. Therefore, I expect the gross margin they will achieve to be higher. Additionally, Hindenburg's claims, as serious as they seem, must also be understood as coming from a company that has an interest in, so to speak, discrediting SMCI. To benefit from its short position, the people interviewed are not necessarily that reliable. It remains true that the investigation opened by the Department of Justice could last several months and therefore leaves a certain volatility on the stock, a certain degree of uncertainty. Another positive factor is productivity. If you remember, in a video, I mentioned how SMCI's productivity had grown significantly. I limited myself to evaluating SMCI's revenues relative to the number of employees, and this ratio has grown very strongly in recent months, and despite this, SMCI is hiring a lot. So if we multiply this productivity by the number of employees projected to grow because they are hiring a lot, I expect SMCI's revenue to grow more than expected. And what do you think? Leave me a comment below and let me know if you think SMCI is a significant bet or too big a risk. And don't forget to subscribe to the channel.